Welcome to Commodities, and here we're looking at gold on the daily chart. And one of the main points here is that the closing price is still under the 1300 here, so we can see that 1300 is the supply, the resistance area, and we're still looking at this move up from this low here through to here as being a corrective pattern and completed, and looking for a move further to the downside as such. So just drilling in here a little bit and working with this particular pattern, we were looking at the triangle pattern working across here with the 1300 here. It's nice to see this lower high here from this one here. It certainly sort of helps. And what we've got now is it appears that we've got an impulse wave down through to here, which is which we're going to label as wave 1, and we're looking for a retracement back to retest 1300 or thereabouts, and then looking for a move lower. So just drilling into that a little bit further here. The 5 waves is probably not the best looking 5 waves I've seen in the world, but all the elements are there. We've got this fast move here for the third wave price action here, and wave 4 and wave 5 here. So we'd be looking for an A wave and a B wave and a C wave back into this area. May not go as high as the 1300, it may just go to here, or it can, if it's stronger, then it will move and test this supply level through here. But in one way or another, we want to see some type of rally here and then fading away at that point. So this would be the place to look for short trades here. But of course, if you're trading stock, you can you got more time with stock, gold stocks as such. So yeah, to the downside. The silver market's pretty much the same as well. The move from the low here, we can see that's in 3 waves, and it's retested the major trading level 2 here, and it's also begun its impulse wave to the downside. So we should see an A and a B and a C coming back up and then rolling over from there. So you can prepare for short trades in a session or two, and we'll be looking to take these lows out through here. The copper market, well, if I take the wave count that I've got, then we'll still be looking for another move higher up into the 320 area, and that's based off this being wave 1 here, wave 2 here, all of wave 3 here, and 4 pulling back to the 4th wave of 1 lesser degree, and then a move higher, well, at least higher than the top of the 3rd wave there. So I also understand that I may have the count incorrect here, and this A, B, and C here, it may be that this is the A, the B, and the C here, and this is the 5 waves up through to here in the 3rd wave here, and can roll over from that point there. But I'll stay with it because this little wave 3 here appears to be corrective in nature, and we're also been working through this level as a classic trading levels pattern, which is the arrival at the 315, the midpoint, the arrival, the reaction, the support, the first high above the level, and then looking for some type of corrective price action, which we do have there. I mean, it's a bit small. That's it here. It seems to be in 3 waves, so it may just be the first leg too. So I've got it as an A and a B and a C here, but the 38.2 retracement level was back in at 311, 312. So we'll see how we go, but this may all just be the A wave, and then we've got a B wave to here, and then a C wave down through to here. Anyway, let's just see how we go with that. But yeah. The oil market, just on the daily chart here, we may have a short trade coming up, because on the daily chart here, we've seen this lower high here from this one, 5 waves moving down through to here, and then it does appear that we've got a corrective move up through here. To confirm the move down through here, then we want to see a move through 101, because that would create overlapping wave structures with this little first move up through to here, and that would a move down through here would make that as an A and a B and a C in its own way. While it's above the previous highs here, it could move up further and give us more of an impulse wave to the upside. So we do need to see that. We do need to see this pattern play out with the move below the 101 through to here, and yeah, we'll see how that goes. The current, I mean, the price is sitting here on the gap here, but the retest into the 102 here is in a nice A, B and C wave here, so it can fail from here. Let's just see how it goes. We want that 101 taken out. The gas market, it's definitely oversold, and we know that, and we knew that, and we knew we were looking for a bounce off 430 here. The 430 bounce here is a bit unreadable because it's so quick. So I'm just assuming that we'll be looking at wave 5 here, so an A and a B and a C wave moving up here a little bit, but I'm a little bit unsure about it. I mean, I could only read it back until, we were looking for a retest back at 450. So let's just see how this plays out here, and so I can sort of read this pattern in here on the intraday thing. So we're not missing anything yet, but it's support on the 450 here, nice tested support. We'll see higher up into this supply level here at group 2. Okay, the soybeans and most of the grains are still correcting. There's not a lot to be had here except for a bit of downside on on some of them. But if this wave count is correct, then we'd be looking for wave C for soybeans moving lower through here. And, to confirm that move lower, the 1450 is the support. So we need to see that as resistance from there. So here you can see that it's the support, so it's not such a good idea to short it, into this. You'll only see a bounce off here anyway. So let's just see how we go. I mean, after all, this move up through here can be counted as impulsive in terms of 1, 2, 3, 4, and 5, and this can be an A and a B and a C wave coming back into here and then moving up through here as well. So, like I said, we're right from the get-go. It was basically we're in a correction. We're not really interested in trading in the correction, and getting our fingers burnt. We're better off waiting for the correction to mature, so we can pick up the thread. We can see buyers moving in, and then we can just, work our levels and add on supports and move up in the right way. But it's just not ready yet, Okay, the wheat market. Now, wheat and corn, kind of same in a way, and there's two possible counts for this as well. I'm going to show both of them, but the primary count that we've got here is essentially all the way up for wave 1, and we're looking for an A wave, a B wave, and a C wave coming back into this area here. The A wave can be completed now, but still we're not really interested in trading the B wave as such, or the C wave here, but that's what we're sort of looking for. The alternative count is, which I'll show you, is basically having this wave 1 over here, this wave 2 to here, and then this would be the A wave to here, the B wave to here, and the C wave over here, and we could have the low in here. So I've just got this on another chart here, which is this one here, and it's probable, but we'll see how we go. We'll still want to see support on the 700 here, but it doesn't stop you buying on this low here, because this move that's come down through here is the A wave, and there will be a bounce back up, which can be starting pretty much now, because we've got like the 1, 2, 3, 4 and the 5 in through to here. So the market's moving into the oversold area, so we can expect a bounce off these lows here. So if you were going to do that, then you really want the market to stay above the 672 area through here. So you'd still need to see a bit of an impulse wave up through here. It's dangerous picking the lows here, even though it's quite probable if you get it right. But yeah, I'm not that interested in it as such. The corn market's the same as well. So we're looking at this wave 1 being in here, and then the A wave, the B wave, and the C wave for wave 2. But as I mentioned, it's possible that this wave 1 can actually be in over here, and this would leave the A wave to here, the B wave in 3 waves to here, and the C wave to here as such. But I don't need to go there just yet on all of this, so we'll just stay where it is. Basically, the market's correcting, and we're really interested because we've got 5 waves up through this low here, from this low here after all this 2-year bear market here. We're pretty much interested in going for the next long trade as such. So we traded all the way up. Now we're waiting for the correction, and looking for the next move up, which, if correct, should be much longer and stronger than this move here. So we should have a good run, and these commodities run quite smoothly. So that's what we'd be looking for. Alrighty, the coffee market. Look, not a lot happening here either. Look, we just expected a bounce off the 180. Retesting the 200 and then looking for further downside. So we're still looking for this A wave here to complete itself here. So there's still, that maybe the B wave is a bit small. So yeah, we'll just allow it to mature, and then we'll pick up the thread. We want to see from the high a clean 3-wave structure in one way or another, and then we can look to move and trade long from that point. The sugar market was a little bit different, as you may know. It already been correcting for so long in this triangle through here, and so it was a bit different from the other market. So this whole correction through here would see another trend, and that's what's occurring now. So we're currently long in this market, moving up through here, and we expected resistance at the 18 and a corrective pattern, and we're in our third day now, or second day, and that's going quite well. Just pointing out this old high here and this here and this here. So we've got the level 18 here, and also the trend line through here as well. So just drilling into that here, we're basically looking for this move up through here as wave 1, and a corrective pattern across here, which is occurring now. And we just really got to just chill out and wait for it, really. It can move back to the 1750 sort of area through here. Probably not the case, and we'll probably stay, in the group 2 area through here. But, look, we've got a 3-wave price action now. So the next time it hits on 18 here, you can look to go long there if you haven't already sort of been buying on these lows area through here. So anyway, let's just see how this pans out this week. And yeah, look, support on the 18 gets you into the next trade, and also scaling in through the 18, 10, 20 and 30 here is important. Support on top of 30 here separates the buyers and the sellers from the 18 here, and support on the 1830, the top of group 1, would see further as the confirmation of further upside. Alrighty, the orange juice. Yes, not a lot sort of happening here either, but we're looking on the 4-hour chart here as a wave, a B wave and a C wave. I don't think the C wave is over if we're taking this move from here. So the C wave will be in 5 waves. It'll be the 1, the 2, the 3rd wave here. And we can see that the market moved quickly through here. Then it's slowing down, So, you can expect the wave 4 bounce to move back up to the 157 area, and then a move down a little bit further. So a little bit like this here in terms of the wave 1, 2, 3, 4, somewhere up in here, 56, 57, and then wave 5 down through here. So you could probably buy the bounce here if you wanted to as well. Right, that's pretty much it. I'll just go over the US dollar a little bit. Up to the 80 here, and then expecting a corrective pattern across this 80 here. So from the high here, the move down, it'll move up, and then another move down through to here. So we're looking for a corrective pattern. How it plays out is always a bit of a guessing game. We look for 3 waves. We have to wait for that to sort of confirm up, but it may just bounce off here and then continue up further. But we are looking for basically 5 waves up, then A and a B and a C here, and then further upside there. So there will be further pressure placed on commodities. It's not sort of tit for tat, but it's it's got that pressure being applied to it. So we'll just watch that. Alrighty, that's it. Thanks for listening.